Hey guys, I just wanted to jump in and just introduce the video that I'm bringing out today. It's a bit different to the normal videos I do. This is actually a podcast I shot with a couple of guys that run a podcast called Young Opportunist. And in this video, we discuss everything about Bitcoin, blockchain technology, and why I am so bullish, why I'm so confident that this system is going to be overtaken by what's happening in blockchain and the revolution. So take some time, watch this video. Obviously, if you need to watch it on 2x speed or, watch it in parts, definitely do that. There's a lot here to unpack and a lot to learn. So if you are looking at getting started and why you want to get started, definitely check out this video. I also talk about, what my price predictions and where I think this cycle is headed to. And you can use these as a guide to, really make your plans and strategy for what you want to do over the next 3 to 6 months, whether that's just in crypto or to bring it across into real estate.
So Ravi, it's an honor to have you joining us today. It's been a long time in the making. And so thanks heaps for joining us today. And welcome to the podcast.
No, it's a pleasure, guys. I know that we've had a bit of a runaround in trying to organize this, but we're finally here. We're finally here to educate and bring value.
That's it. So we just want to hand the mic over to you to provide our audience with an intro into cryptocurrency, but really more specifically what Bitcoin and altcoins are.
Yeah, it's a pleasure to be here, guys, obviously. I don't claim to be, a crypto expert at all. I've just been in the space for, now 5 years. And so it was actively like investing a little bit at the time because I didn't have that much money at that time. I was putting everything into real estate. Yeah. And I just realized that there was some opportunity here with, Bitcoin, altcoins. And so at a very high level, Bitcoin is and was introduced as like a peer-to-peer transaction sort of currency, right? So that's why it's called cryptocurrencies. But what it's become now, without getting too technical, is now it's almost viewed as a store of value rather than a substitute for currency. Because when you really compare that to some of the other altcoins or some of the other codes around, crypto assets, they are superior in other ways. And so there's always a case there that, people have made, especially central banks, trying to introduce their own currencies, going, well, this can, it's faster than Bitcoin and it's got lower fees and things like that. So now it's almost like, because it's a deflationary asset, it's now holding its value as a store of value rather than a currency. So Bitcoin, obviously, number one, came out, was created in about 2009 when all the GFC stuff started happening. And on the back of that, there was other cryptocurrencies that started getting created. And so most people know Ethereum and probably Cardano, but there's like thousands now, right? Now, most of them, 99% of them are absolute garbage. But the reality is that, when you start looking at altcoins, it's everything apart from Bitcoin. And each one has like little use cases and there's companies, behind these, crypto assets. But as a whole, you've got Bitcoin as the granddaddy of them all. And then the altcoins that people like to speculate on, which would be the next Google, Yahoo, or Amazon of the crypto asset space.
Yeah, cool. So you sort of, you kind of related it a little bit to like the .com bubble. And I think a lot of people do. Like, I think a lot of people sort of, because it's such a new asset in general, the Google and the Amazon and things like that are the ones that came out on top. But there are also like 9,000 other .com like companies, and just like there's 9,000 other cryptos currently on the market. So yeah, it's crazy.
Yeah, correct. And I think that's where people get caught up into it, right? Is, a coin can come out or an asset comes out and there's really good marketing behind it. And people sort of buy into it thinking, oh, well, I've missed Bitcoin. Now I can just go and speculate on something smaller to make a bigger gain. But I think most of them will go to zero anyway. But, everyone's got their own strategy, I suppose.
Yeah. You kind of touched a little bit on it, but we already have the Australian dollar, which works perfectly fine transactionally. What's this new currency solving, and what's wrong with the fiat system we have right now?
Yeah, so I think a lot of people started realizing the real drawback of our fiat currency in 2020. When we have the pandemic occur, we've got, central banks all of a sudden are now going, oh, here's some money, here's some stimulus. And there was so much money supply being plugged in, right? And people started realizing that, hey, we worked so hard to get into a budget surplus, yet where did this money for JobKeeper and JobSeeker come through in Australia at least? And what we've realized is, with a couple of digits on the computer, we can increase the money supply. And obviously, there's a lot more technical stuff that happens in the background with quantitative easing and things. But essentially, we've realized that the more that they print, right, or the more that they create, the less value our currency actually holds. So I like to use the example of real estate, where most people are looking at real estate thinking, oh my God, look, it's such a great asset. It keeps going up. But what we don't realize is that it's not the actual asset going up. It's the fact that our fiat currency that it's denominated in is actually losing value over time. And that's why during 2020 and 2021, we really saw the flaws within our normal fiat's, currency.
Yeah.
And it's really interesting about the gold standard and how the US were pegged to that. And you could actually go into the banks and transfer money for a weight in gold. But then now come these days, the modern days, we're not backed up by anything, and we're not backed up by the gold standard, which is very
and
interesting, because where are the governments pulling this money from? And
and it's something I think it's good we talked about this, because a lot of people blindly think the dollar's I can hold it in my hand, that classic, I can use it every day. I can go buy Macca's, I can do whatever I want with it. But in reality, as it sits in your bank, it's deflating in price dramatically.
Yeah, correct. And it's an interesting point you've made, that whole, being denominated or being backed by gold, getting that removed by Nixon in 71, I believe.
Yeah.
It meant that we've just got this infinite supply. And that's where Bitcoin, the way it was created, was so that there's only ever 21 million of these coins. And so that's where you've got countries now adopting it as their legal, tender, as their legal currency. And I think it's going to pave the way for a lot more to happen in that space.
Yeah, definitely. And especially it ticks off everything in economics 101, like scarcity and
divisibility, it's all backed and things like that. So yeah,
it's really interesting. So could you explain the Bitcoin 4-year cycle and how that influences the rest of the crypto market going up and down?
Yeah. So at a very high level, it's to do with Bitcoin mining. So basically, how you create Bitcoin is through a mining system, right? And it's decentralized. So you've got different nodes. So just think of them as computers all around the world, and they sit there and they solve an algorithm, right? And as soon as they solve a block in that blockchain, then it basically corrects it, and then it goes to the next block and it continues down that path. So in order for that to happen, you have miners, and they get rewarded in Bitcoin. And so what happens is we have a halving every 4 years, and that is where the 4-year cycle got created. And so essentially what it means is that you've got, every 4 years you'll have a halving, and then a year after that, you usually have the big price growth. And that's pretty much where we're at. So that's where we saw 2017. We've seen the same thing in 2014, 2013, and we're seeing it now, which is 2021. But with what's happening differently this time around is that you've got, so much money being printed. They are seeing that, the price isn't really keeping up with the last cycle. And so there's just a real, uncertainty in the market with a lot of traders and a lot of the guys that have been experienced with analysts as well, that are really thinking, is the 4-year cycle broken now? And are we going to now move into something that's a bit more traditional, like your stock markets and things like that? So it's interesting, 2021.
Yeah. What's your opinion on that?
Look, I think having a system there where you say, every 4 years I can put my money in, get a 10x and then remove it, and then come back 4 years later and do it again. I think it's a very easy system, but when everyone thinks like that, it generally doesn't do that. So I think there's a lot more information now versus in 2017 and obviously 2013, 2014. And so I think a lot more people are aware of it. And now that we're preparing for it, I think this is where people get wrecked, because they have only one thing in mind. Let's put our money in for 12 months. We'll make a 10x return. But they aren't really looking at, hey, what happens if the 4-year cycle doesn't exist? And you end up putting money in, lose a lot, and it's money that you can't afford. I personally don't think we're going to follow this 4-year cycle. I think we've broken it now. And that's because, You've got so much mainstream adoption, institutional buying as well. That's not to say we don't have corrections along the way, but I just don't see how you can come in date by date, come in 4 years later, make your money and leave. If it was that easy, I mean, everyone would be doing it and it would be an amazing ride for everyone involved.
Yeah, yeah. You also, I've seen you posted a little bit, especially when there was that big initial crash in April. You talked a little bit about how fear and greed influence the market. Could you touch on that?
Yeah, so these guys do some analytics behind the scene, and it's for free. You can check it out. Fear and Greed index that gets updated every day at 10 a.m. And basically, it's really just monitoring what's happening with the sentiment. And I think if you sort of look at that, you can see that when we were trending up, into the 60 and 65K USD for Bitcoin, really hitting those tops, we were at like extreme greed at like it's out of 100, right? So it's like 90, 95. And so those are some of the indicators that people can use to realize that, hey, this market's getting a bit frothy. Maybe I want to take some profits off the table. Again, it's hindsight, right? Even for me, I didn't believe that we were going to crash like we did at that point. So I didn't sell. And so a lot of people were caught in that as well. But at the same time, you can do the opposite, where a lot of people now don't want to touch Bitcoin because they're like, oh, it's gone down by 50%. It's probably going to go down to 0 or 90% drops and the bear market's here. And that's generally, like, over history has proven to be a really good time to buy. So I think it's the same, sort of concept across other asset classes. With real estate, I was saying to everyone last year in COVID 2020, I was like, guys, this is it. Like, this is the buying opportunity of a lifetime. I know I personally started buying in March last year when things started getting locked down. And so it's the opposite of what you want to do. So it's almost like, think about what 99% of people want to do and do the opposite.
Yeah. And it's when you are at those like lows, it's so like psychological.
Massive.
It's so scary. You're like, and you start to almost like group think like the rest of the people you see online and be like, it's definitely we're in a bear market. It's going down further, going down further. Like we were both caught in that 50% drop. We haven't sold at all as well. So we're pretty confident that we're just pretty confident holding the assets that we have. We have a bit of conviction about it. But yeah,
it's also interesting. Like we learned a little bit at uni about behavioral finance, and that was a massive insight for us in investing. And and we even did the same thing. Like I fell into a trap of selling out early because I just wanted to take the profit, and then I didn't even need the money. Like it wasn't like I needed the money, and I sold. And then like a week later, I was like, why did I even do that? And then just put that same amount that I sold out
at a high price.
At a high price. It's like so stupid, like just falling into these traps of, not being confident.
Yeah. And like this sounds like if people are following the market. So I bought in to the markets. I played around in 2017, like bull cycle and things like that. But I really got invested in it in May of 2020. And I bought Cardano ADA at 12 cents and I was holding that. And then I remember it got to like 21 cents. And it sounds stupid thinking now, like what the price had hit like this cycle. But I remember being like, I've doubled my money. I'm going to sell. And then I sold.
I'm a genius.
Yeah. And then I sold it and then it just kept going up. And then because I had this like, I anchored to the price where I sold that. And I was like, I'm not going to buy back until it hits that price. But I knew the value that like it had. So I don't know why. It's just all so psychological and you can really like, it's a battle in your mind.
Yeah. And get caught up with it all.
Yeah.
It's funny.
I think you've got to get burnt a few times before you realize what the best process is. And everyone's done it. Like it doesn't matter how good of a trader you are. Someone's done it at some point where you just go, oh, okay, that's the one that got away. I've done it all the time. Like even this year alone where I was like, oh yeah, better sell that one, jump on the faster train. Yeah. And that generally is the one that just stops. So
I swear you're not alone. As soon as you decide to sell, it like it goes up, or as soon as you decide to buy, maybe it's just me, I don't know. But
you can just tell me next time you're selling because that's the one I'll buy.
Stay tuned. What were the key aspects of this asset that attracted you to invest in the space? And how do you keep such a strong conviction in a market that is so volatile and that we've seen over the past years?
Yeah, great question. I think for me, being a traditional real estate investor, I can see the benefits of owning things that are scarce, right? Like land. And when I start seeing things that are in a different space, I'm always open to adapting. And I think with a large portion of my net worth in real estate, I thought it was only fair to start diversifying and learning about other asset classes. And with Bitcoin, obviously you get that scarcity, right? Now, when you really see that it's a hard asset, right? Inflation that support the growth of this hard asset. So for me, it was coming across into a market where I'm like, I know there's volatility, right? That doesn't necessarily mean risk. It just means we're early. And for me to put a portion of my wealth in that, being that, hey, this could be the 5, 10, 15-year plan. If I have enough in here, I could do like huge amounts in terms of money wise that I could bring back and buy real estate anyway. Again, I think for me to keep conviction, even during times where things are going down, it really comes down to your investing strategy and your plan. For me, I wasn't using money that I needed tomorrow. And I think far too many people are coming into this space going, oh, how do I double my money so quickly and get out of the rat race? And I'm like, hold up. You're really trying to escape a 40-year rat race by trying to make a few lucky picks. You're gambling, right? You have no plan. And when things don't go your way, you're not going to be able to be sane and be okay with this drop. But at the same time, there are also the people that get double their money and then they think, oh, well, it could double again. And then they lose everything. So that's just gambling behavior. And for me, I'm looking at 5 to 10 years from now, right? What this could be in 5 to 10 years. And when I look at how much, we've got a dated system when it comes to traditional finance and how much money is tied up in that, when that comes across to decentralized finance, the whole DeFi space is going to explode. And I think we've got Ethereum at the backbone, right? It's the real bare foundations of that space. And that's where, for me, I like Ethereum. I hold a lot more Ethereum than Bitcoin.
Yeah.
I think that's a really important point, what you brought up about invest in money that you don't need for, say, 5 to 10 years, because I think that's where the behavioral finance and the mistakes that you start to make is when you need that money. And then that's when you start to sell out early and miss out on gains and become real edgy in your decisions. So
yeah, 100%. And I think, I'm at a phase now where once you get comfortable with your strategy, I'm cheering that we see red. I'm cheering when it's going down because I'm like, I can buy more positions and dollar cost average in, which means my overall position with these coins are going to be so much lower. Now, I think it's speculative when we start looking at like low cap coins and try and make money and quickly. Again, everyone's got their own strategies, but I think nobody's got a plan. More people need to have a plan.
And that's why there's so much misinformation out there, especially with social media, on Instagram and TikTok. The so-called influencers are promoting these real shit coins, low market cap, just for real high gains. Where do you go for credible information and news on cryptocurrency? And where would you recommend our listeners to go?
Yeah, great question. I mean, to just give you an insight, I've got a YouTube channel and it's not like huge. It's not massive, right? A couple of thousand subscribers. But, I get probably 3 to 4 emails a day about, hey, can we collaborate? We'll pay you to talk about this coin, talk about that coin. And the truth is that, like, for me, it's transparency, right, with my audience. And I'm trying to build like a big brand versus trying to make a quick dollar, right? So when it comes to, I guess, transparent information, you've really got to go and dig deep. There's a few people I follow on YouTube. I've got a video on my YouTube channel around 5 YouTubers I follow. So, maybe we can link that in the show notes or whatever it is. But those are the go-to people for myself, those 5 YouTubers. But at the same time, you're looking at with blockchain, there's so much transparency that you can actually go on, look online and see where money is moving from on-chain analytics, right? So Glassnode is an area where you can go onto the website and check what's happening with the actual statistics. And I think, taking it with a grain of salt, like I know I do some clickbait articles as well or titles for YouTube, but that's the algorithm. And I think I try and bring people in and then educate them going, hey, by the way, I know you came for this, but have we looked at the context of this? And I don't think, enough people do it. And you see it every year, like in 2017 it happened, 2020, 2021, you start getting all these new YouTubers and influencers come up and they start saying, I know cryptocurrency, because they know it works for a little while, but it's not sustainable.
And that's why we really wanted to get you on, because I've been watching you for a little while. And I know that like in our original like mission statement of the podcast was to bring credible people on that have really been through it, but also promoting information that is credible. So that's why I really wanted to get you on to, talk our audience through, because I know you have a pretty sound mindset when it comes to this space.
No, I appreciate it. And look, to be honest, I've been offered to come on other podcasts, but then when I saw what you guys are doing in that space, it's encouraging, because you guys are young and like, it's almost like, and that's why I created the YouTube channel. It's going, what would I have wanted when I was 19, 20, 21? And it was people that I could relate to that actually talk about this space and educate me for free, right? Yeah. And at some point, like you really miss out on that when you're looking back 10 years ago. Well, I'm 29 next week. So 10 years ago, I didn't have that. So it's good. You guys are doing a good job.
And it's funny, we were just talking about the misinformation and like us getting involved with, or people getting brought into the space of like, triple your money in this, or not triple, like 10x your money in like this little low cap coin. I remember we have like a funny story from when it was like, when was it, you reckon? September last year? Like it was when it was peak, like just going up, I reckon. Yeah. 2020. Yeah. And there was do you remember Reddit, how Reddit did the GameStop thing and Reddit all got together? Yeah, well, for our listeners, you guys probably heard it, but basically all these people on Reddit got together and then bought GameStop when it was like heavily shorted, and then it basically just skyrocketed in price. We started seeing the trend with people, all these big groups on Facebook and things like that, getting together and being like, at this time in this time zone, we're all going to buy like this coin. And
it was Ripple. Yeah. So they had all the time zones. It would have been, no, I think it was this year.
Oh, okay.
And they had all the time zones and said like, if you're in like
Australia, if you're in Japan, if you're
on the bang, this is the time we're going to buy, like we're going to pump it.
to the moon.
There were all the Facebook groups, the crypto groups.
And then I remember I saw it first and I was like, "Oi, Reese, like, let's jump on it. Let's jump on it." And
typical FOMO. Hey?
Yeah. And then we ended up putting like I put on like a decent amount. You put in a decent amount as well. And this was
for a broke uni student.
Yeah.
It's all relative, right?
Yeah, exactly. Yeah, it is. So it was probably like 10 p.m. and like it was meant to skyrocket at 12 a.m. our time. And so we like jumped in early and we like bought it like, so we thought we were going to like jump in early so that we could catch it earlier, because what it was promoting was like everyone buy at the exact same time. But we were like,
so you guys thought, let's buy it just before it. Yeah, okay, cool.
But everybody else thought the same thing. So like we jumped in and then it started going up. I bought it 60 cents and then you bought it like 85 cents.
Yeah.
And we were like watching you go, like, we're on FaceTime. We're like, dude, it's going up. It hit $1. And we're like, we're going to the moon. We're going to the moon. And then it just drops. Like it got to $1.10 and it just hit 12. Like it was meant to skyrocket here. It got to like 12.10 or 12.10 and then it just started to plummet. And we're like, hold. And we were watching like the live charts.
We were on live stream YouTubers, like they set up the charts and everyone's
spamming
like
buy.
Diamond hands.
Like who's selling? And then we ended up watching this live stream because we were like, nah, it's gonna go up till like 4 a.m. Like for 4 hours we were just like watching the live chart, hoping we're like, it's going up. We went up like 4 cents and then just back down.
So we went to bed that night in tears.
I don't blame you guys, man. Wow.
We definitely learned our lesson in that. And like, that's how easy it is to get caught into this.
Yeah.
So much shit on social media at the end of the day.
It was funny though. It's funny looking.
And I think, we can laugh about it now. I'm sure you weren't laughing at the time. But the truth is, right, with the fact that the entire space is unregulated, this sort of stuff happens, right?
Yeah.
And that's where a lot of people get caught into it. If they've been here for 5 minutes and they go, oh yeah, like let's do it. That's where it's like, you're better off just missing that because there's always another opportunity. Just get educated first and figure it out.
100%. Yeah.
On the topic of decentralization, Ben and I had a couple chats before and we've been interested in this space. So we have talked about it before. What are your beliefs and opinions on like in the future, if we look at a totally decentralized currency, what are your opinions on that?
Look, I think I think what people are scared of is taking ownership and accountability. So when you think about your coins, right, not your keys, not your coins, so you need to keep that on like ledgers and hardware wallets, right? Now, if you lose that, or you lose the phrase, you lose all of your accounts, right? And people don't want that accountability. So I think, right, and I'm just going out there, we don't know, we can maybe reference this in like 5-10 years.
Yeah.
I think traditional banks are going to have to start offering the service of how they can hold particular ledgers and hardware wallets for people at a fee. And I think that is where we're headed to. And in terms of like, using some of those currencies to become everyday currency that we, use, I don't think it's going to happen. And that's why I think there's central banks that are, really fastening up the process of digital currencies and having a digital based central bank currency, right? So for me, I don't think we're going to have like suddenly start using Bitcoin for like coffees and things like that. I see it more that it will coexist, but I think fiat currency is dead. I think that's getting removed. And I think a large amount of traditional finance money and infrastructure is going to come across to decentralized finance. And that's an exciting space to be in, because I know for a fact, being from a real estate background, how much paperwork you have to do to just get a loan and the amount of run around. And there's like, just to settle on a property, there is so much that happens that can be eliminated with something like smart contracts. And so it's just going to be very interesting, but I think you have to be on the right side of it. If you are someone that doesn't adapt, you will be left behind. And that's where we're going to see a lot of, technology coming in to become more productive for the economy. But that ultimately means that we have job losses and things like that.
Yeah, 100%. And that's similar to like our opinions on it. We do believe that like a fully decentralized,
like peer-to-peer,
like probably wouldn't be the best. And we do think that there needs to be some kind of like centralized, whoever that is, if that's an organization or whatever, who knows, to look after that, because there can be a lot of holes in the whole area, I guess.
Especially because if we want to one day, or if like if Bitcoin and cryptocurrency in general wants to scale one day, they've got to account they've got to cater for everybody's needs. So that's where like DeFi comes in and things like that. But there's going to be a lot of people that do want a service from a bank that looks after everything for them, because as you said, they don't want to take that responsibility. So I think it's I don't, just like we said last night, we were talking about last night, and you said extreme of anything is bad.
Yeah.
And like fully deregulated currency banking situation, stuff like that, isn't always a good thing, in our opinion, at least.
Yeah. No, I agree. And I'm on the same page with you guys. I think it's going to be a mix of both. Whether we get, maybe the whole crypto space gets regulated, right? But it's still decentralized. Maybe it's a mix of both, but I think I'm on the same page with you guys. You can't have, like, we don't even know what the problems of having a complete decentralized system will be.
Yeah.
When we get there, we're going to be like, oh shit, now we didn't think of this. Good stuff, mate.
Come back.
Where's the fiat, bro? Where's the fiat?
That's so funny.
No, that's so interesting. It's such an exciting time though. And it's exciting, if you do have the conviction in the space, and you've done your education, and you have that background conviction.
And really seeing like both sides of it, not just being really pro crypto and saying like this is the future. There's not going to be anything else. Like if you can be the smartest people, challenge both sides of the fence, and if you can draw like some things from over here and some things over there, then. And
I think like Ravi, you would know, like there's a lot of people that I think are too far down the rabbit hole when it comes to like, because it's an easy rabbit hole to dive down, I think, when it comes to like in this space, especially. So I agree. And we learn about that in like behavioral economics as well, like confirmation bias. Like it's always easy for me to Google why Bitcoin is going to be the best thing and then completely ignore why it's not.
Well, that's with anything, right? Like even with real estate, there's a narrative and you can always follow it. Like the same guys every single year for the last like 7 to 10 years have come out and said real estate's going to crash this year, and they've got a case for it, right? And so that's what I try and bring on the YouTube channel. I'm like, we've got to look at both sides. I'm a buyer's agent. I know, I'm pro property, but at the same time, we've got to understand the reality is properties won't always go up in price, and it's not always the best investment for everyone, right?
Yeah.
And so having that balanced approach, I think, is the key. With you guys being at uni, what do you guys get in terms of the general feel and consensus around the classroom and with your lecturer and things like that, are they more like edging towards, yes, decentralized finance and cryptocurrency is what I'm going to invest in versus traditional stuff?
No,
Well, there's not too much conversation around it, but typically your normal stereotypical professor lecturer is all about, and I don't know if that's built in within the curriculum of the
No,
uni,
I think it is. Yeah.
is definitely just like, it's so outdated. It's so like years ago theories, and there needs to be a bit more of the new stuff coming in, because that's what we're going to be
it's going to be a whole, and it's almost, it feels like, I don't know about you, but I feel a little bit like weird studying economics, because like the backbone of economics, which is like foreign exchange and like bonds and things like that, with the amount of quantitative easing, like we talked about before, like these are being fully manipulated, and these are like our biggest indicators when it comes to macroeconomics. And I was listening to a podcast just recently, and it was someone who was in the macro space, and he's like, every single person in macroeconomics I know has moved over to cryptocurrency, because like it's the one thing that just makes sense in this crazy like fiat world. Especially because they're manipulating two of our key macroeconomic indicators.
It's like on that point, and it's very interesting. I would have thought that would have been the case, right? And generally you'll find the traditionalist guys are going to stick to what they traditionally know. I know I've got a few friends that are in banking, right? And they're quite high up. 3-4 years ago, I'm having conversations with them. They're like, don't touch that Bitcoin stuff. Like, it's all Ponzi scheme. It's fake. Now they're the same ones that are telling their, clients and things, hey, we need to have at least 1 to 5% exposure to it, because, hey, it is the best performing asset over the last 9 years or whatever it is. And the reality now is, if we don't adapt, we get left behind. And that's the same thing with, when we probably had the turn of the internet coming in and being introduced, how many people sat there and said, well, the internet, it's a fad.
Yeah.
You can't have you buy clothes online because you want to touch and feel that. Well, I think online retail is doing better than, well, it definitely is in lockdown.
Yeah.
And that's the people that didn't adapt, well, they got left behind. They're yesterday's news. And I think the same thing's going to happen in this space.
And as we go on each year by year, the excuses seem to be getting more and more. Like at the start, it was like, it's a Ponzi scheme. But then you see like countries like El Salvador that they're bringing it in within their system, and it's like, well,
they're like, oh, well, only small countries are adopting it.
Yeah.
And then
what's the next? What's the next excuse going to be?
Yeah, I agreed. And then initially before that, it was, it's always just used for like illicit drugs and terrorism and things like that. The truth is, and I find this very fascinating when someone goes, how can you invest into an asset that drops every 4 years, by 80% and then comes back up? I'm like, you're pretty much putting your entire life savings, all of the hard work you do, into fiat, into a system you don't even understand and gets printed every year. What are you talking about?
Yeah, it's so true. And that's why I said before, I was like, a lot of people don't know the reality behind fiat, because I feel like bankers and the whole central banking system have made it as difficult as possible, like making it so complicated.
And all this jargon. And
jargon
special
and
words that the general retail investor or person doesn't understand.
Yep.
But
it's all designed that way, right? And same thing with our education system. Why do we not get taught about finances? It's because it was created for that purpose of not teaching you those things.
And be an employee and like, not even think broader than 100% that. Yeah.
Correct.
So just for the listeners' perspective, we're recording this on the 23rd of July, 2021. So in April, Bitcoin experienced a 50 to 60% crash just recently. We're currently sitting at a price of around 30,000 USD. We've got up a little bit from then over the past couple of days, but we've been moving sideways for 2 months now, I'd say. Where does the market go from here?
Yeah, look, again, I'm no expert. I just look at what I can look at. And for me, I don't think we're going to suddenly take off now. I think we're going to have this sideways chop for a while. I'm talking a couple of months until about Q4 of this year, I think is the point where we see if we're going to end up going down. And if we do go down at that point, then it's like, okay, like maybe we shut up shop for 12 months, 18 months and come back. Or we see the start of what could look like the second leg of this bull run. I think we need time to consolidate. We've got people in this system that are still holding that, have been sitting there with a 10, 15, 20x gain, and they may be wanting to take profits the next time we hit certain, numbers.
Yeah.
And then there's others that are coming into the system. And the reality is the way that we move up is fairly quickly because FOMO really kicks in. And so the way that I would sort of go about, without giving financial advice, I'm going exactly to your point. You can't be a maxi, right? Thinking this is the one thing that's going to be amazing and it's always going to work. I think we need to be fluid, especially during a time where things are changing very quickly. So it's going, as much as I believe in cryptocurrency, I'll still be investing in the traditional stuff like real estate.
Yeah.
But at the same time, if in the next couple of years I start seeing that there's certain things moving, I'm going to pivot and start allocating more funds towards that space because that is the future, right? Yeah. So I think having that plan around, hey, this could just move up just like traditional stocks, just like traditional real estate, and I'm looking at 5 to 10 years, you're probably just going to dollar cost average in. And that's where I think you'll get the biggest gains.
Yeah.
Because for me, if I approach it that way, I can always adapt to going, prices are now taking off. Awesome. Whereas I can't do the same if I just go, next time it dips, I'm putting everything I have because I think it's going up. And suddenly 18 months later and you're down 50%, it's not going to work out.
Yeah.
Is that where you guys sit as well?
Yeah. So I've always looked at it similar to the like sort of 2013 bull run that we saw, 2013-14, where they had that initial so basically it was, I think it got up to $250 from $80. And then which is so crazy saying, I'm talking about Bitcoin as well.
Oh man.
I know.
the jealousy.
Yeah. So yeah, it was tracking along at about $80, and then it got up to $250 early on in the year after the halving. And then it did a 60% correction back down to $80. And then just like you were saying just before, in the fourth quarter of that same year, it went up to over $1,000. So I'm thinking, I have the same idea as you as well.
Yeah, it's going to be interesting because I think, with 2013, it looks very similar. We've had that initial crash, then it moved sideways for 3 to 6 months and then just took off.
Yep.
Now, if that happens, amazing. But I think there's a guy on YouTube and he's very good. His name's Benjamin Cohen, and he talks about lengthening cycles and diminishing returns. And we may find ourselves where we have a lengthened cycle that doesn't return your 50x. We may come down to a 20x or 10x. Yep. And that would put the end of this bull run or the top of the run somewhere in Q2, Q3, Q4 of 2022. So we still have time if that works out. But again, if we suddenly take off and we do a 10x in the next couple of months, I think everyone's going to be happy anyway.
Yeah. Sure.
So going back on what you said about your strategy, for our audience, basically what you're saying is you're keeping like a diverse portfolio, not just purely going into crypto and have the possibilities of losing it all. You're also playing the normal stocks and your ETFs and index funds.
Yeah. So personally, I don't invest in like ETFs or shares or anything. I try and allocate that portion of my portfolio into trading cards and collectibles, which I find more entertaining because I've got passion for it.
Yeah.
Whereas with real estate is my traditional investment. And I like that space because of the leverage. So I think for me right now, it's going real estate holds the biggest holding, followed by crypto and collectibles, very similar.
Yeah.
And so it's just about adapting. With collectibles, at least it's liquid. So if I do find that, hey, crypto is making that real push and there's the narrative is changing, I can move that money across, maybe even sell a couple of properties. And I'm not emotional about that either.
Yeah.
What are your sort of strategies?
Look, we're not fully. Speaking personally, I'm still at uni, so I don't have a lot of capital to play with, and real estate isn't really in question for me at the moment. And ironically, I still haven't bought any like ETFs, but I definitely want to dive into that soon, just to be diverse and have that as a long-term hold, and then also just a little bit into the crypto space. How about yourself?
Yeah, so I've been lucky enough to sort of have a full-time job for a little while now, and I was lucky to invest pretty early, like in sort of April or May last year into crypto. So was able to pick up like Stellar and some other coins like that for like 6 cents and stuff. So I put in what I would say about 50% of my portfolio into there. So I'm playing a little bit more like a riskier play, but at the same time, I'm comfortable with what I hold and I have a bit of conviction about what I hold as well. So, and then the rest I'm sort of just saving to, eventually get into real estate as well. So maybe we'll have to have a chat.
I think the key here is that, what that sleep at night factor, and for a lot of people, if you've got, imagine having all of your 100% net worth in crypto and it drops by 60% over a couple of weeks.
Yeah.
Like that's going to be sad, right?
Yeah.
And so if you have it diversified, I think, yes, you may have, could have got better gains elsewhere, but it's that sleep at night factor. And the reality is we're young. If you're investing and you're like, younger than 45, I think you're young. And I think you have a long horizon or a large horizon for, being time in that market. So you don't need to necessarily take huge risks because one risk could send you back a couple of years, whereas you don't need to take it. So enjoy the process.
I think you said a really good thing before about dollar cost averaging in. So for the people listening to the show now, basically what that means is just setting aside, like maybe it's once a month or something, or once a fortnight, and just putting in a portion of money. So let's say you're earning $600 a fortnight or something like that. That's putting $50 or $100 of that every single fortnight into crypto, but not thinking about the price or anything like that. So you're dollar cost averaging over a certain period, and that just takes out that emotional side of investing and worrying about when it's going to dip or when it's going to go up. So it's a really smart strategy for people that are looking to get into the space.
Yeah, it's a set and forget, right? And I think a lot of people have it set up with ETFs at the moment. I'm like, you can use the same strategy across, into something like crypto. And maybe it's just 1 or 2 coins, Bitcoin, Ethereum, and just keep plugging away. And you'll realize that in 5-10 years, it could be completely life-changing money. Or if it's not, we'll be, putting money in that you're okay that one day it might not be there.
Yeah.
So we probably have some people in the audience thinking one of two things. One is, I'm never investing my money into this crazy asset, or this sparked an interest and I want to get involved. What are 2 pieces of advice you would give someone looking into getting into the crypto space?
Yeah, so number 1 would definitely be education. And I think when I say education, it's getting a variety of, perspectives in that space. So whether that's through YouTube, reading articles, I would try and avoid mainstream media, because you've got to look at what are the intentions behind certain people putting out certain content. You've got someone like Morgan Stanley comes out and says, Bitcoin is the worst thing ever, it's going to zero. Only 2 months later, realize that they've been buying up the whole time. So you can't trust anything like that. You need to corroborate all of those sources. So number 1, education. Number 2 is figure out what your plan is. And the best way to do that is to figure out, what are you passionate about? What do you want to do long term? And the end in mind first. If you suddenly have a structured plan, you remove a lot of the emotion out of you purchasing property, ETFs, or investing into crypto. And I think a combination of those two will keep you, grounded when things aren't going your way in a volatile space. And it also keeps you grounded when things are absolutely taking off. Because if you had in your numbers, in your plan, that you wanted to sell at a particular point, you'll sell and you won't regret it because you had it as part of your plan. So having those two, I think, is the key.
Yeah.
This next question we wanted to ask is a question we ask everyone that comes onto the podcast. And basically, it's, what advice would you give to 20-year-old Ravi looking to get into the space, or in general when it comes to personal finance and that in general?
Yeah, I think it's not so much about investing, and it would be more in line with following that passion, right? Obviously, for me, I was fortunate that I followed my passion and tried different things, but I don't think enough people take the risk when they have the chance. And there's always an excuse, at 20, you're like, I just came out of uni, or I'm at uni, I need to take things seriously now. You get to 25 and you're like, I'm halfway through my 20s, I need to build a career. You get to 30 and you're like, now I need to buy a house and have a family. So you're never going to take those risks. And the truth is, you only need one of those risks to pay off, because the amount of money you make when you do something you're passionate about and you're happy about is going to be far better and larger in the bigger scheme of things than you taking up jobs because you think that's the highest way you can make money. And I've seen that from, going from promoting at a nightclub, making $10 a weekend, to now making money that's absolutely life-changing in a year that I wouldn't have thought I could make at any job. So that's my biggest advice is test and taste everything. As Gary Vee says, try everything, because one of those things will work. And if you give yourself enough chance, when you find that one thing, you are going to, one, be happy as hell. And with that happiness, you're going to start attracting certain people into your life and certain opportunities that ends up getting you to a place where you won't ever have to think about money again. We're here now, and it's because we've got this passion for finance and personal finance that our paths have crossed, right? If you don't have the same attitude, we're not crossing our paths, right?
Yeah.
And vice versa. So just imagine how many more people you'd let in versus going 9 to 5, 5 days a week, I'm going to do a job that I don't like. Mate, you're going to be like the most sad person. So you're trying to invite people that are positive in your life. How do you think that's going to happen? It's just not.
And it's so true. Like, you just attract like-minded people at the end of the day. And that's only just going to help you grow and help the others around you grow as well.
Yeah. And I love what you said there. That was like such good advice, even for us as well. Like, we are young, and for the listeners as well. Yeah, we're young, we have time. And this is maybe, one of the only times we have in our lives where we can take risks without too many consequences. And
dude, I look back every year and I'm like, I was spending more time playing COD when I could have just gone out and said, hey, maybe I'll take a personality test and get to know myself and become self-aware.
Yeah. No, I love what you said there. We interviewed Charles Tubby, who's the owner of Central 21, which is a major real estate firm in Australia and also in New Zealand as well. And he says something really cool, and it's it has to do with value attracts money. Money doesn't attract. No, what was it?
Yeah, it was like all about not chasing money. So it's like, don't chase the money. Reach a certain level of professionalism, and the money will come and find you. And that was really special.
Yeah,
was that what you're talking about?
Yeah. And it's similar to what you said about don't just chase the money. Like, go take risks, do what you find, like what you're passionate about, because often it'll come 3-fold, 10-fold, 20-fold. Yeah,
without you even knowing it, kind of thing.
Yeah, I had put up on, just to finish up on that point, I put up an episode on my YouTube channel around, does money buy you happiness? And it's weird because it's like, it's a paradox where you go, I want to have the money to be able to do something I'm passionate about, and that's what stops people. Whereas if you start the flywheel if you're passionate about it, you get more time, and that time allows you to create more opportunities that creates more money, and the money leads to more opportunities that gets you to do more things you're passionate about. So you've got to start somewhere. And when people start going into, oh, well, this is the one thing that's going to make me more money, you're not in this flywheel. You're in the rat race. You're in a totally different space.
And it's exactly what you said earlier on about why you started. It's because you could have easily taken some like promotion deals to promote thing that doesn't align with the values that you want to put out to people. But one day, which you're already doing, you're killing it. But one day that's going to come in millions because people are coming to you for value and not just because you're promoting something you're not passionate about.
Yeah, 100%.
The same thing's going to happen for you guys, right? Like, starting early, you're just tasting and testing what you guys like. Even this podcast, imagine when you're at like episode 489, and that's when you've got, a major Big Four bank comes in and says, look, we want to be your main sponsor. You're probably making money going, we get to talk to people. This is great.
Yeah. That's the dream.
So good.
For people that want to learn more about you and what your platforms that you have, where can they find you?
So YouTube's probably the most central pillar for me. So it's personal finance with Ravi Sharma. So I put up about 3 videos a week talking about real estate, cryptocurrency, and financial freedom. And then there's things off the back of that. There's like a podcast there. Then there's like the online course and a Patreon as well. But I think the YouTube channel is probably the breeding ground for all of those things. If people like and get educated on there, they'll then go, okay, what else do I want from here? So the YouTube channel definitely.
100%. We'll link that in the show notes as well. And we encourage all the people listening now to definitely check out all those links and check you out because you have some amazing content out there.
Thanks, boys.